Good morning, ladies and gentlemen. What's today? Happy Tuesday, August 6th. Good morning, Asham. Good to see you. The double marks. Good morning, Keith. Good morning, Anurag. Good morning, Mark. With a small M. How you guys doing this fine Tuesday? Hanging in there? Getting used to August already? Crazy how fast these days go, or months go, and weeks go. So we've always noticed, right? The older you get, the faster the days go. I can attest to that, that's for sure. Looks like we got a little bounce back after yesterday's rout, but we'll see if it lasts at all. Still got an upside down SR showing up. There's the co-host himself. Good morning, David. Get my speakers a little bit more. There we go. Can I hear you better now? Or he's going to get coffee. Good morning, Andre. Morning, Mike. No trade for New Rug? You and me both, brother. I did not take a VA trade this morning. I had a client that did, and he made 365 on paper, so rocking and rolling. See,
can you hear me?
Yes, I can hear you now.
Okay, great. I muted my microphone because I was crunching on the edge of a slice of pizza.
Cold pizza in the morning?
Yep, cold pizza breakfast this morning.
Nice.
So, sorry, didn't mean to interrupt. Go right ahead.
That's all good. I was just saying New Rug didn't take a trade. I did not take one either. I was a little busy doing a few things, which we will get to. But I did have one of my clients this month did just email me right before. I'm not sure if he's going to make it on or not. Oh, looks like Alex is making it on. So well done, Alex, on your trade this morning. He went short right before the open, and he grabbed a profit of 365. So fantastic job, sir.
Nice, nice. Long or short?
Short. So he hit he saw this fifth column hit. I'm assuming, correct me if I'm wrong, sir, but I know we have discussed that. Get this so you guys can see the whole picture. You know, I don't hang it on the screen, but right as that guy hit, I'm sure that was his exit signal. So he took a short right there, and then he got out 365, one contract.
Nice, nice job. Absolutely good, really good. Good morning, Andre. Good morning, Mike.
You're welcome, Alex.
Well,
you're doing the work and you're reaping the benefits, so good job.
Awesome.
Alex is our resident retired IT scientist, so I think he's going to get a really good, he's going to like today with what we have to show everybody.
Yeah, definitely. And really, if he has any insights, hey, we're all ears.
Yeah, I'd be curious to see what you think, Alex. It's data driven, so it's right up your alley. Unless you're retired and you say I don't want any more data. I understand.
I think after you've been in it a while, you know, you kind of
you can't not.
Yeah, you can't not do it. You
know. Looking forward to it, absolutely.
Yeah, Anu had a comment in the chat room, and I responded to that the swing oscillator was down at -10, and kind of it looked like it was kind of like stuck there, and that's true. When it's extremely bearish conditions, the oscillator will stay right down at the -10 level, which is the probably the most extreme level possible for that indicator. And so when it's flatline like that, you're just basically staying short. You don't want to take any other positions at that point. You don't want to go long. And so when you look at that, you know, going back, I mean, it was just, yep, it's flatline. That means every single component of that oscillator is negative.
If anything, you'd be looking for sell the rally.
Yes, exactly. Absolutely. And the same thing happens too when you're in strong rallies. It will go right to 10, plus 10 there, and it will flatline. That means an extreme bullish condition. We got a pretty good rally going on today, so that's why we're kind of bouncing off of that bottom on the oscillator. But keep an eye on that. I doubt. I mean, personally, this is just my personal opinion. I doubt very much this rally is going to last.
Yeah, I was kind of staying away from this morning since I had things to do to get for this call already. But I was looking, I'm like, yeah, I don't believe you.
Yeah.
Negative volume coming in here. We'll see how long this lasts. It might come right up to SR2 and go bam.
Yeah, and I don't know if you're watching, but the futures were down like 365 points last night.
Yeah, when they opened up, it just dropped.
Yeah.
I did see that. That's another fun one. I do watch all four on one screen here.
Yep.
And yeah, absolutely. This one I don't have the overnight, but or do I? No, I don't have it turned on here.
Well, you got the cash
Oh,
index.
wrong one. Sorry, wrong screen.
Yeah.
I got too many screens, remember? Let me get the other one. Where's my quad screen? This one.
Yep, there you go.
This one I got the volume underlaid just to see it.
Yeah, it was, and what was strange too is the cash index closed down 767 points. And the futures, the YM futures went down to as much as 940, I think, after the 4 o'clock close. And then it went down another 365 points. Crazy. Haven't seen that kind of volatility since 2008 and 2009. Although there was a big drop in the markets, of course, back in early February 2018, where we had those couple thousand point days. Those were big days. But if you, I don't know if you have the advanced decline window open, because we had a triple T day yesterday.
I don't have that one. How fast is it to recreate that one?
Real easy. I'll give you the formula here. I'll put it.
Where's my most basic chart I can duplicate?
This is the first triple T day that we've had in a very, very long time. There's the UVOL, DVOL, and I'll give you the ADVN, the advanced decline line. We had, if you get any of you guys who have not seen the report that I did on this phenomena in the market, just let Dan know. I'm pretty sure it's up in the members area someplace. It's called the Triple T, and I forgot why I named it. Anyway,
I remember it being the triple trend or
the True Trend Day. I think
True Trend. That's it.
Yeah, True Trend Day. So you can either search for True Trend or you can search for something like that. Is it possible to put files into this chat? Probably not.
I don't believe so.
Okay. Well, what I'm going to do is I have an updated copy I'll send to you, and you can upload it to the membership area. And so what it does is it identifies this phenomena, and it was really prevalent during the 2008-2009 financial crisis period. And I used it in April of 2009 and recorded my trades based on that. And this was in a real money account. And I made $47,000 in one day based on this trade, just on this one trade. And so it doesn't happen very often. Like I said, I mean, the last time was like 2008, 2009. I think I saw it once in 2010. It was a pretty weak period in August of 2010. I saw it happen once. And yesterday was the first time I've seen it since then. It's something I really, really pay attention to. You got to put that on a.
I was going to ask you, what's the trick on this graph here?
5 minute chart, bars. 5-minute bar chart. Don't use candles, use the bar chart. Yeah, 5-minute time period.
So where's there we go. And you want bars.
And yesterday was the first day I've seen it. Of course, I took advantage of it. I just had an absolutely fantastic day with it. But the last time I used it back in 2009 in April, I mean, I was all in. I mean, I basically put every penny I had into this trade after I recognized what was going on. All right, can you put a window next to it? So do the, go up to that Rubik's Cube thing.
Create a separate one, do the same.
No, go up to the, no, do the Rubik's.
Oh, you want a second one. Gotcha, I gotcha.
Yeah, right next to each other. And then you can paste in the advanced decline. There's two things that I look for here. And you guys can read the report that I'll send up to Dan, put it in 5-minute. Yeah, well, that's good. You just put it on a 5-minute, that's all. Put a bar. Yeah.
Oh, too far.
Yeah, I'll just give you the quick version of this.
Come on, just a little bit, please. Holy cow, that snaps fast.
Yeah.
Let me squeeze it here.
Yeah, there you go. Okay, so the first thing that has to happen within 15 minutes of the open is that the advanced decline has to drop below 2,000, minus 2,000 or plus 2,000, whichever way this day is going to go. And so yesterday it did. So very, very quickly it dropped below that 2,000 level, minus 2,000. Then after that, I look at the up and down volume. The difference between the up and down volume has to be in that pattern, which is very, very consistent, a very slow moving, declining pattern. It starts out negative and it doesn't, if you go back to the previous day, look at the difference in the previous day. Look how volatile that up and down volume is. Very crazy. There 99.9% of all the days are like that. Up and down, up and down, up and down. And when you get, and now take a look at yesterday's, you can see what a unbelievable difference it is. Oh, you got it on a 1 minute. It should be on a 5.
I was going to say, why does it look so funny?
Yeah, it has to be on a 5-minute. So those two criteria, minus 2,000 within the first 15 minutes, and then we have to have a really, really stair step, and that's what it is. It's a stair step decline of the up and down volume. And I don't know what causes this, but whenever there's a really large move in the market, if you recall, in the fall of 2008, we had days in which we were up 800, down 700, up 600, down 700. This pattern was identical to all of those days. And you could, I mean, basically, you can make a fortune. Like I said, after I recognized this pattern, I made the very next trade. I made $47,000 in a single day doing this with real money trades. This was not paper trading. This is real money trades. As soon as I recognized this pattern, it's a stair step of the advanced decline volume all the way down for the entire day, and it doesn't have the volatility that any other day has. It's a very, very clean, simple pattern. I don't know what causes it. I'm not sure why it does that, but even with the market opening up down like over 300 points yesterday, as soon as I recognized that stair step pattern and the fact that the advanced decline was below 2,000 and stayed there after the first 15 minutes of trading, I went all in on the downside. Had a fantastic day yesterday. I'll tell you how much I made in 2009, but I'm not telling you how much I made yesterday. but it was incredible.
This is one of those, you want to have this, like if you could have a spare monitor somewhere, just always sitting, like, oh, hey, look.
Yeah, I check it like the first 15 minutes of trading every single day. And I have for years. And yesterday was the first time I've seen it. So now it was prevalent during the 2008, in the fall of 2008. Didn't take advantage of it because I didn't understand what the pattern was at that time. But it was probably the last one in for like 5 or 6 years in April of 2009 when I did it. Unfortunately, I wish I had caught on earlier. But now we're seeing it again. I don't know if this predicts what's going to happen to the market. I don't know if we're going to get these wild swings again like we did back then. But if we do, it's something that you really want to pay attention to.
Since today we started way up at 1,600 to the plus.
Yeah.
And it's dropping.
Yep. So the criteria is it's got to go plus 2,000 or minus 2,000. It's got to stay there in the first 15 minutes. And then you see the stair-step pattern on the up and down volume. Voltaire says, totally forgot about this. I knew it looked familiar yesterday. I kept fighting it on my test account. Yeah, don't fight that one. There's something about it. It's just like a consistent barrage of selling orders that's consistent. I don't understand it. I really don't, because, I think people, the steadiness in which the advanced decline volume continues to decline or advance if it's above plus 2,000 is a really interesting phenomenon. If you don't have the report, like I said, I'll send it to Dan, and he'll put it up in the members area. Make sure you guys get that.
So as the day's starting out, when you look at it, is there any particular time that you wait to say, hey, this is another true trend day?
15 minutes.
15 minutes is it?
15 minutes is it, and then I'm in.
So it bounces down and it's doing this, and
yep,
you're stepping, we're at 8:45.
And you can tell, you can see it's not volatile. It's like stair steps. They're just going down in a nice, steady, even way. And as long as that maintains the pattern, then you just stay in until, like, hey, either the end of the day or pretty close to the end of the day. I got out when we were close to minus 900 yesterday, and I said, I'm good.
Well, yeah, exactly. Everyone's going to start closing their orders, and you never know what happens at the close. So, yeah, I would do the exact same thing.
Yes, exactly.
And the Shamik does work to the 2,000 plus side, yes. So if this opens up here, like if this were to open 2,000 up, like today, but it didn't, absolutely. And then you would see a stair step green.
Yep. Now it's got to stay above that 2,000 level. So it's got to be either plus 2,000. It's got to stay there the entire day. If at any point during the day it goes above minus 2,000, you're out.
Yep.
You're out, period. I found that a couple of times the pattern broke during in fall of 2008, but it was kind of rare actually that it broke. But as soon as it gets out of that 2,000 area, you gotta get out of the trade, whether long or short. But it works on both sides, plus and minus 2,000. All right, cool. So you guys can check that out when you get a chance, and download the report from the members area. We got some interesting and exciting news to talk about with the volatility arbitrage spread. One of the Dan and I, we talked last week, and we mentioned the fact that there was a lot of hidden sells in the spreadsheet for the YMNQ. We wanted to be able to kind of clean that up and get a better sense of where we are with the YMNQ trade, and for all of the different spreads that we're using. And so let's get into that now, if you have that spreadsheet available.
I surely do. So I'll swing it over here.
Oh, you already started marking it up.
I did. I think I got all of mine. Yeah, so Dave and I were working on this, and he comes up with the latest and greatest this morning and says, here, let's use this one. I'm like, dude, I got so many markups last night. I was up till midnight.
Okay. Well, anyway, number one, the purpose of kind of reworking the spreadsheet was to kind of clean up some of the hidden cells. I think it was kind of messing with the ability to fill down the cells on the to expand the spreadsheet downward. But during the cleanup process this weekend, when I was working on it, I decided to expand the binary trend out to a 10th place instead of keeping it at 5. There's a couple reasons why we wanted to clean up the spreadsheet, yes, but we also wanted to see if there were any changes in the market that maybe have been affecting the volatility spread. One of the things that I found while working on it was that the average move of the volatility average spread on a daily basis is now 0.40. And it used to be higher, it used to be 0.50. So the average move now is less than it was about a year ago. And that average was a good couple of years that it lasted. So I think that's one of the reasons why some of the trades have not been making as much money on a per contract basis, because the average spread for the day has been lower. And that's a good 10% lower, right?
Mm-hmm. Or 20.
Yeah, 20% lower. So that's one reason. The other reason why I kind of wanted to take a look at the spreadsheet again was because for me personally, I really like to do, I want to get back to doing swing trades again, especially now that we have the MYM and the micro mini futures contracts. I think it's a great opportunity for all traders to kind of look at swing trades, holding them for a couple days at least, to get into really good positions. So there are no hidden cells except for, right in there, I think it is. All you have to do is like highlight. You don't have to even do that. Just highlight and then go on hide. Yeah. Well, you have to drag your mouse across the C column to the M column.
How many do you want? Do you want all 10?
Yeah.
I see what you.
So you just, you drag across there and then you go and hide and it unlocks all of them. There you go. So I highlighted, this is just for your information, when you get the spreadsheet, all of those first through 10th column rows are going to be, and columns are going to be hidden. But you can expand that just by dragging and dropping across the column CBC all the way to N, and then click on hide. I highlighted all of the cells that were either minus 2% or plus 2% or more. And so you can kind of scroll down there. You can kind of see how the patterns are developing, and you can see how far they've extended out to the beyond the 5th column. The 5th column was typically the end of where the bell curve was kind of calculating. Now that we've taken it out to the 10th, my initial observations are that a lot of the moves now are ending right around the 8th or 9th column. And so it gives us a little more granular view of the actual spread and how it's where it's kind of ending. It's either ending in the 8th or 9th column, or even sometimes it's gone all the way to the 10th column. So it gives us a granular view of the spread itself, and it kind of shows us where those moves are terminating. As it's still 2%. 2% or more on the upside, 2% or less on the downside. But those cells are highlighted now, so you can kind of see exactly where they terminate. So then if we go over, the price ratio hasn't changed. There is a hidden column between the price ratio and the UD percent column, but that column is only used to calculate the UD percent, and it's not really all that important. Okay, you can also, yeah, you can drag and drop it, or you can just do the unhide thing, or hiding in.
I'm a dragger.
You're a dragger, okay, that's fine. So the cumulative, the bell curve now is terminates at the 8th column. So we're using the 8th column numbers. And if you scroll up to around the 900 level, 800, 900 row, you can see that the bell curve all the way to the 8th level was still pretty well formed bell curves. Really, really nice form, just like they were on the 5th column. So there's not much change as far as the bell curve itself goes by extending it out to the 8th column. But we've noticed lately that the bell curve is not as smooth as that. It's much more jagged at this point. And so we needed a way to be able to make a determination of peaks and valleys in the bell curve. And so we've not only do we have a cumulative bell curve, which is the last 8 days of trading on the volatility arbitrage spread. It's a cumulative total of that spread for 8 days. We are now doing a cross-column bell curve. The cross-column bell curve, oh, and you can see I found a way to highlight those negative bars.
Well done, sir.
Yeah, I dug into it. So what that does is it takes the first to 10 columns across all of the columns in that row and adds up the total for that row. And then I added a overbought and oversold column, which is column AL. That is the total of the bell curve cumulative and bell curve cross column. And what I found was that a lot of times when it got into that 20 to 30 range, it indicated a change in the trend. So it's kind of a check against the cumulative bell curve. Now we have a cross column bell curve. And when it hits that 20 to 30 level, it's a pretty good indication that we're going to go into an uptrend, possibly. When there's a really, really, really strong move, then that overbought condition or oversold condition can last for a while. Yep, just like that. So it can last for a while. The one thing that I would look at is I would go back to the binary trend, and now that we're expanded out to 10 columns, you can see that there's just a whole sea of green there, which indicates a positive overall trend. And you can see that where the negative trend looked like it was starting, and when we only had 5 columns up there, you would say, hey, we're going into a negative trend there, which is still actually exactly what happened. But you can also see that we're just at the very, very beginning stages of that, and that negative trend is really in a sea of green that terminated after the 5th column. So the larger binary trend across the 10 columns kind of gives you an idea that, gives you it gives you a kind of a bird's eye view of exactly what's happening with the trend itself. The other thing I would draw your attention to, so the most important thing I think that that Dan and I discussed was the patterns all the way over to the right. The only thing that you have to update, just like the previous spreadsheet, is the date, the Dow closing, and the index closing. Everything else is totally automated. The only thing that you're going to have to do, you fill down all of the columns based on you fill down all the columns from the left of the spreadsheet. All the rows are filled down, and you have to do the fill-in function. So show them how to do that. You just drag and drop those down.
Yep. So I highlight I highlight the bottom column, then I click and I drag. However far I want to go, we'll go to 1200. I release, I come up and I say, where's my fill button, which it's moved, so I have to go somewhere else. Where did we have that guy? View. See, here's a good test.
I think it's at the home or file.
Oh, yeah, there we go. Yeah, just regular home and then fill. Hit the little down arrow. Don't just click fill because it might do the wrong one. So make sure you hit the arrow, then fill down. And what it will do is it will. Did I not? My mouse is being funny. I think my battery's dying because my scroll just stopped too. Good.
Yeah, your battery's gone. Hey, that's exactly how you do it, though. You hit the fill and then you hit down. Fill down so that all of the cells below that. What we can do is we will maybe before we upload the spreadsheet, Dan, we'll just copy down like 1,500 or something so they have plenty of room there. So they won't have to do it for a while. The only other columns that you're going to have to drag and drop yourself because the formulas are not there is the Dow change and the NDX and the low high volume. So if you want to go back over to those, yeah, why is that?
It's a good question. What's going on here? I just replaced the battery. My scroll wheel stopped working 2 minutes ago, so I don't know if something's going on. That's weird. Did you not let me go?
It's like not clicking on the down thing. It's like clicking someplace else that you don't want it to click at. That's weird.
So it might be time for a new mouse for Dan.
Yeah.
That is how you do it, guys. You saw it the other day, last week, so yeah.
Yep. And then, so the only other columns that you have to drag down are the Dow change, the NDX change. Basically, you just have to. I could not figure out the formula to be able to drag those down because you had to take two different rows and subtract them in order to get the change in the Dow and the NDX. So use that, highlight those and then go to the black button there and then drag that down to fill in the cells below it. Yeah,
so we'll put in a mock number. We'll just say, let's say today closed at 25,888.
Oh my gosh, now your keyboard's gone too.
Seriously? I think it's Excel. Wow. Let me close this spreadsheet and come back to it.
Yeah, okay.
Something's seriously busted here.
You got too many windows open.
Gremlins are going on everywhere, yeah. Wow.
Oh, Voltaire says, keep it short so we're forced to do it. That's a good idea. And then
That's not a bad idea, exactly.
Yeah. And you get used to doing it.
So we can, where's my apps? There we go.
Now your keyboard is gone?
Oh, see, if my scroll wheel's working elsewhere, so yeah, it's just Excel. I'm looking to kill Excel and come back into it. So I'm playing with other things. So I'm doing extracurricular activity. Sorry, guys. You put a cool little gremlin in our new spreadsheet that I don't know about.
No keyloggers or anything like that.
That's good. Oh, there we go. I found it. There was a hidden window that was trying to save something. There we go. All right.
All right, good.
Come back to the share. So there we go. Just to show you one time you have some Voltaire, just do it shortly. We'll just do a couple. Fill, down, boom. Then the same thing up for these guys. So we'll put in mystery numbers, 26, 989, whatever. And the Dow NDX really tanked, 74.05. So we went to a positive too. So you see how these don't fill in? So what you do is you just scroll over and highlight those, then let go of your mouse, then mouse over.
With a dark cross.
The black cross is the one you want. You see if I move slightly, just a little bit, there's arrows. You don't want that, and you don't want that one. You want this one. Click, drag, release. And that pulls down the changes of the previous day.
Right. And the ATAU automatically should, the low, high volume and the VA
will automatically populate.
Not sure. You might want to, I don't think
throw some numbers again. Yep.
Yeah, it did it. The down signals, I don't think I've got the formula on that. I can't do that. So you'd have to do the swing signal down and up too, and drag those down.
Oh, negatives work.
Yeah, those work, but it's the swing signal down and the swing signal up. I don't think
Oh, gotcha. So this one we have to drag
those
down
are yeah, those are automated.
these.
Yeah, I think
Okay.
yeah, I think if you drag, I forgot. That's a kind of a new one. I was just playing around with it this morning. I don't think I have that.
Yeah, I was going to say that's the new addition that you put in. So, so as of right now, you just have to drag down these two, and if we get it updated in the future, we'll let you know.
Oh, you can no, you can drag and drop those down. I think I put the formula in there, so you're good on that. So no, yeah, do the black cross
Yeah, that's what I did.
on both of them.
I dragged it down from up here.
Okay, and so if you click on a cell down below there, you still see the formula in there.
No.
Oh no, so that's what I mean.
Oh,
So
you want me to do that? So if I do
yeah, I
this,
want you to do it. Yeah.
yeah.
So
So that's what you can do. So whenever you drag down your whole thing, just do the same thing to these columns.
yeah, the only reason I don't do it on the Dow is because it has that funky number there in the
Yeah,
below.
you'll get this. Just don't be alarmed.
Yeah, don't freak out about it. But otherwise, yeah, you're good. That'll work. So, okay, so let's go into the low high VA. So basically, what I did was I calculated the Dow change based on the input of the Dow and the NDX closing numbers. And I highlighted the days in which they closed positive, and the days that they close negative is in yellow, the days they close positive is in green, in keeping with the binary trend spreadsheet. And then the volatility arbitrage spread is the same thing as the W column, but it's highlighted based on the color of the move. So if it's positive or negative. Probably should change instead of blue for positive, I'll change green over there on the W column. But in any case, I wanted it right next to each other so that you have a reference point of the changes in the Dow and the NDX, and then in its relationship to the volatility arbitrage spread. And interestingly, while I was updating this and I was talking with Dan yesterday, I said, you know what? There's got to be some sort of pattern here. Let's take a look and see if we can get into a little bit more detail about what the pattern is. And so what I did was I created the low column, the high column, and the VA column, which has a formula in it. So if the Dow is positive, it's a plus sign. If the Dow is negative, it's a negative in the low high. The low represents low volatility, which is the Dow. The high column represents high volatility, which is the NDX. And the VA column is just the volatility arbitrage spread, represented as either positive or negative for that day. And so as we're going through it, this is all very, very brand new. But one thing that kind of stuck out to me is that and this is anecdotal, but I'm actually going to have some statistics on this, is that when the Dow and the NDX are both positive, we tend to get a negative volatility arbitrage spread. Now, there's an exception, of course, but the next day we had the Dow and the NDX up, and we had a negative volatility arbitrage spread. Now,
Well, this is one that we saw too, right? So if the low and the high are both positive, that means both the Dow and the NASDAQ advanced that day.
right?
And the Vol-Arb spread is positive. That's typically when we see a reversal.
Yes, that's another thing too. We typically see a reversal on those. And if you notice, and I've gone through the spreadsheet again this morning, is that the days in which all three are positive, the volatility arbitrage spread that day is very low. It's typically low. It's like very, very small. Yeah, there's another one where it's really, really small. But it also kind of gives you a trigger that the next day it might be negative. So yeah, there's another one where it's 0.03.
That's interesting.
You know, it's very, very small. They're all positive, but then the next day we had a big negative volatility arbitrage spread. So I'm not really surprised today, based on those numbers, that the volatility arbitrage spread today is down, basically. I think on the 4 hour at least it's down because we had the Dow is up. See, both the Dow and the NDX is up. This is kind of an interesting little discovery that we made, is that when the markets are both up, we get a negative volatility spread on average about 90%, more than 90% of the time. I'm going to go through those three columns to kind of get some statistics together for you guys. When we do upload the spreadsheet for you, I'm going to put them over to the side someplace and put some statistics in there about if, let's say the Dow is up and the NDX is negative, what happens to the volatility arbitrage spread? If all three of them are up, Dow, NDX, and volatility arbitrage spread, what's the average move of those? So I'm going to start to put together some statistics on that. So what we found is the main point is that the overbought, oversold column, which is AL, now kind of gives us an idea if it's in the 20 to 30 range, and we're not in a huge sea of green like there. I mean, we got some negative stuff in there, but it's not a huge sea of green, so it's not a really, really terribly strong move. As soon as we hit that area, typically in that 20 to 30 range, we're going to have a down signal. And so the swing signal down is an automated formula. You can click on that down thing and you'll see the formula up there. Basically, if it's over 20, it's going to signal a down in that column. And if it's under minus 20, it's going to signal an up. Now, it's something that just alerts you to the fact that, hey, we may have hit a peak in the bell curve. That's what that is. And the next couple of days should be negative. And that was a big one right there. Yeah, that one was fairly good too.
Here's one thing that I've noticed, Dave, that I found last night after we talked, this is a good example of it, is I found if there's 2 consecutive days of full binary trend that coincides with this signal, it's over a 1% move following it. Interesting.
Nice. Very nice. Yeah, that kind of makes sense actually, because I would say it's fairly rare for both to be now that we spread it out over a 10 column period, that for them to be completely full of negative or positive, and we hit a peak in the bell curve.
Right. Yep. That's key.
That's a good pattern there.
Right. It's just completely too far. But like you say, it's got to be, and it has to coincide with these signals. Like here, I did an example of, so here's 2 of them that are all 1s, but we're not at a peak on the bell curve. Our overbought, oversold signal is not triggering because it's only a 7.
Right.
So it's not one of those occasions. So it's when they all line up together. Same thing on the negative side. So yeah, that's one thing, that a little nuance I found, that was they line up to 1. I think it was only one time that it didn't be a 1% move, and I think it was this one, but it was still a 0.88.
Yeah.
Following it. But yeah, that's a very interesting nuance I found.
That's fantastic. That is really, really good. I like that one. So in that case, where you are right now, we had a peak in the bell curve. The OBS overbought, oversold was at 23. The binary trend was full for 2 days in a row. Perfect signal. You take that swing down signal there, and you got 1.25% there over 2 days. Now, the time to enter that is, of course, you're going to be updating the spreadsheet at the end of the day. And the time to enter that then would be immediately after the open at 6 p.m. of the futures contracts.
An important note that I have found from experience, guys, is don't have your orders waiting to enter when the market opens for the futures.
Yeah.
In interactive brokers, because you'll get the worst potential fill, and there is some fluctuation when that opens, right? So wait at least a minute or 2 or 5 to get those orders in. Because I actually called him. I'm like, what was this fill? You guys are ridiculous. I'm like, I just lost like $100 because you filled me the worst possible way. So he went back and looked. Well, here was the bid and here was the ask, and this is where you got filled. I'm like, it opened at say it opened at 10, and the range was 1 to 20. Well, they filled me the exact opposite of the extreme of that bar. I'm like, yeah, I'm never doing that again.
Wow. Yeah, that's pretty bad. So you want to wait until the open and then try to get in. In early in HOLM1, I mentioned that 6 p.m. period of the open, you get in when the percentage change between the YM and the NQ was as close as possible. There wasn't a big spread there. And so then you can track, you'd be able to track this spreadsheet to your P&L. In fact, you might even be able to do it if you can do it quick enough between that 4:30 and 5 p.m. period.
Right.
Because if you wait until the 6 p.m. period, the spread might have changed already. So I'm thinking the 4:30 to 5 Eastern time is probably even a better opportunity to enter. And typically that 4:30 to 5 is quiet as can be.
Yep, definitely.
I
would agree. So yes, Greg, that's exactly what we're talking about. We would use this to do a swing trade on the spread, and this is also what I did with a couple of my markups here, where I also noticed, we're talking if 3 of them all equal, that signals a potential reversal. So I threw in some, here's a short signal, here's a long signal. So yeah, we would use this for like a swing trade, and this can just be a one day. It doesn't have to be multiple days, but that's when you watch. So you would enter it, and this is where you use the micros to start out, right? Until you have your confidence and your faith as we bring out this new version of swing trading with this new spreadsheet. Is like James just said, between that half hour before the 5 to 6 p.m. period when the market's still open for futures, you can enter this. So if you see even a short one here that's not lining up, but you can say, hey, we got a plus, 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 that's typically a sign for a reversal the next day. So you can enter that micro, one short MYM, one long MNQ. And then if you want to monitor throughout the day, you can. That's the nice thing of the micros is you're not going to get overly hurt. And then you can come back when the day closes again. Then you can say, okay, yep, I made 1%. I'm going to close this trade. Because I see we now have a massive move. I'm not going to continue with this one. I don't want to go multiple days based on what we see. That's when you can exit the trade. So you can use it for swings with futures and be safe overnight. That's where I kind of mark these up. So I got, long here went. This was another 1% move. It's crazy how these 1% are showing up a lot more recently.
Yeah. Yeah, that's actually a fantastic point. And if you go back to your example there of the three pluses on that day, you can notice that in the binary trend there was the beginning of a negative trend there. So that's a pretty good signal when you get those 3 crosses in a row that the potential there is for a negative day the next day. We're just starting to explore a lot of these patterns. I also sent it over to Andrew to see if he can identify some patterns as well. But I think there's something to this. The majority of the patterns seem to be a negative correlation with the Dow and the NDX changes. So if we have 2 negatives on the low high, we get a positive that day on the spread. That seems to be more often than not the pattern. 2 negatives equals a positive on the spread. And so in the morning, if you're doing you're setting up your charts, and from the previous day that we've got 2 negatives, if you're opening your charts up in the morning and you see that the market is up like it is today, well, the chances are, the probabilities are pretty high that we're going to have a negative day on the volatility arbitrage spread. That's kind of the point. You get 2 pluses. If you know that the market's going to be up on the day and you're pretty sure that, hey, that's going to last, it's going to stay, we're going to have a negative VA spread. If we're down on the day, we're probably going to have a positive VA spread. So that's kind of interesting that there's a total negative correlation there. Dan and I had talked about that several weeks ago, and I said, I don't think there's any correlation until I started looking at these pluses and minuses based on the closing values. I wouldn't have believed it. I didn't think it was actually, I mean, it looked too random to me, but now I look at it, I don't think it's that random. You got two negative, if the Dow and the NDX are down, you're going to have a positive, on most of the cases, you're going to have a positive EA spread. That's a fantastic insight right there.
Yep.
That's a crazy good insight. So anyway, Norg says, Dave, does the spreadsheet talk to you in your sleep? Well, no, it doesn't talk to me in my sleep, but I do think about it a lot. I do think about it a lot for sure. Because the older I get, I'm 60 now, I'll be 61 in December. I'm more interested in the swing trades rather than even the short-term trades early in the morning. Don't appeal to me as much for some reason. I'm not sure why, but there's a part of your brain when you're a teenager that kind of turns off the risk mode. You do things that are incredibly risky when you're younger that as you get older you'd say, oh man, that was crazy. There's no way I'm going to do that. But there's a and this is a scientific fact. There's a particular part of your brain that turns off risk. So you don't understand what the risk is that you're actually engaging in when you're a teenager. And I think as you get older, it's a complete opposite. All of a sudden you start seeing risk in everything. So one of the things that I am looking for as I get older is this idea that I can enter into a swing trade in a 1 to 2 day period with a high degree of certainty that it's going to come out to be successful. That's what I'm working towards at this point, is a high degree of certainty in a certain and reliable strategy that will generate a return on my money. This is very impressive. Thank you, Anurg. I appreciate that. Dave, Dan have to put together a rules doc. Yes, absolutely. One of the things that we want to do is make it a rule-based system. Absolutely. Rules-based system. That is absolutely critical, Asham. So you would use it for swing the spread. Yes, absolutely, with futures. Now, what futures you use is totally up to you. It doesn't matter what size account you have. If you're looking for a general kind of a more steady return on your investment, the micro E-minis are absolutely fantastic. The reason I like those is you can scale them. So you can start out with one micro E-mini on an overnight position and not worry about it. If you find that you get a better opportunity to enter a second contract, so you can add that contract without still having the full risk of a full YM contract or NQ contract. Now, if you have a very large account, I would say over 250K or more, you might want to do the YM NQ instead of the micros. But I would say anything under, if you'd have less than $250,000 in your account, stick with the micros. That's just my personal opinion. That's what, Greg says, you guys are getting better and better, making trading easier. That's the goal. I mean, when the first iPhone was invented, I'm pretty sure that they said, hey, we're not going to just, hey, this is the best, we've got an iPhone now. I don't think we need to change it for the next 10 years. I don't think they said that. When they came out with the iPhone, they immediately, if not before, started working on the next version to make it better and better and better. And that's my goal. And that's Dan's goal too, I'm sure. Isham says the new spreadsheet looks like it ties with the Vol-Arb 2.0 script. Vol-Arb 2.0 has 12 binary cells. Yes, that's exactly right. So we want a little more granularity in the volatility arbitrage spread so that we can, we get a little more granularity. We also want to target Now, there's two ways that you can, we've already mentioned a couple of different ways that you can actually use a spreadsheet. Number one is, as Dan said, you take a look at those three crosses and say, okay, yep, we're probably going to get a reversal there. We got three negatives. Yep, we're probably going to get a reversal in the spread. So you can use it for your next day trading setups. The other way is to use it with the binary trend, as Dan showed you, with the two columns that are filled out and a peak in the overbought, oversold column. Yeah, we're probably going to go a couple days and take a nice swing trade there. So we're gonna go through the spreadsheet a little bit more, and we're gonna get some statistics together about the low, high, and the volatility arbitrage spread, so that you can have some statistics to kind of back things up. We're also going to try to create some rules around the system so that you can have a pretty good handle on when to take long or short positions. But we think this is really I think a pretty big step forward in our understanding of how this spread works. Mark says, yeah, this is really good. Thanks so much. You're welcome, Mark. And Nurk says, I have the same scenario, Dave. Yes, scaling makes a lot of sense. Yeah, absolutely. I think so too. Nurk says, thanks. Nisham says, thanks. You're welcome. V says, would like to upgrade to private mentorship. Hope you got some spots.
I will send you an email, V.
Yep, absolutely. Dan is in charge of that, and he'll definitely get in touch with you. You will not find a better person who understands this stuff than Dan. So you're in good hands with him. Appreciate the kind words, sir. Yep. All right, guys, we got about 3 minutes left. Now, as far as release time goes, Dan, what do you think? It's kind of, I got a few things, I mean, real minor stuff. I'd like to put some statistics together, but I don't see any reason why we should not keep the, or not release this unless you.
I can put this one up. Just know, guys, that probably the end of the week, it'll be a little bit cleaner. So if you want to wait till then, that might be just easier for you. Because I'm going to go through, I've only marked up about the last 4 or 5 months. So I haven't gone through the entire thing if you scroll up or whatever. Not that we need every single one, but it just helps people identify where it is in stats. So it's up to you guys. I can put up our latest version, then what's what I'm looking for? Just give you the refresh at the end of the week.
Well, let's shoot for Thursday maybe. That'll give me a little more time to do a couple last minute things with it, and put some statistics together.
Yeah, so Thursday, Friday's looking probably the best bet.
Yeah,
absolutely.
Okay, good.
And Keith, I will not delete the good stuff in the video. As you guys probably have noticed, what I do is if we do divulge very important information, I don't want it to be on the open internet. So I only save it for our members, which is you guys. And if I do put part of it on YouTube, it is a condensed version. So if you guys are ever looking for it and you see it on YouTube and you think you missed something, go to the member site, the full copy's in there.
Yep, yeah, that's exactly right. Yeah, because some of the stuff that we talk about is just for the VA and the private clients. So, and
that's part of the reason that they're not downloadable anymore in Newrig is people were sharing them where they should not be. So we want to keep things safe.
Yeah, unfortunately that does happen, and we need to protect our intellectual property because this stuff is valuable. It's extremely valuable. I hope you guys understand that, and we share everything that we have with you guys. If you're a PC, especially if you're a PC client, we don't hold anything back. And it's taken me 40 years to get to this point.
No wonder this spread isn't working anymore. You're funny.
Ban them. Yeah. As too many people are taking advantage of it, I think he's saying.
Right.
Yeah, we probably are competing against some large hedge funds that are putting in $100 million into the spread. So now we got to stay one step ahead of them.
Right. We just see them doing it.
So you guys are under a code of silence here.
Secret decoder rings.
You don't get the cone of silence. You don't know that reference. You're too.
Yeah.
You got the cone of silence?
The cone heads way back.
No. This is the Cone of Silence from Get Smart, the original series in the 1960s.
Oh yeah, that one I don't recall. Sorry. You got me
Okay,
on that one.
so what they did is it's hilarious. So whenever Get Smart, who is the spy, he's so funny. He's hilarious. He's just an idiot. But anyway, whenever he wants to have a private meeting with his boss, they sit at this desk and they have this huge cone thing that comes down from the ceiling and encompasses them, so they can talk in a private conversation without anybody else hearing. But it's absolutely ridiculous because the bottom's open, so their voices carry out into the entire room, so everybody can hear what they're saying.
Oh, it's fantastic.
But they think they're having a private conversation, and then because the voices reverberate inside the cone, they can't hear each other. Oh, you got to get some. I mean,
I'll go check it out.
It's really corny, but it
does sound familiar. I just didn't remember it right away, so absolutely.
Anyway, that's my historic reference and marking of my age. Mark, my lips are sealed. Awesome, Mark. I'm going to hold that to you. All right, guys, have a great day, and we'll see you again on Thursday.
Yeah, have a fantastic week, everyone. We'll catch you in a couple days.
Bye, Dan.
Appreciate everything, Dave. Take it easy.